Welcome to the Deep Dive. We're digging into a recent earnings call today, pulling out the key signals for you.
That's right. We've got the numbers, the strategy discussion, the outlook. Quite a bit to unpack here. It's a complex picture, really.
Absolutely. So let's jump right in with the results snapshot. First quarter revenues actually beat expectations.
Yeah, for both main businesses, that's ATM, Advanced Test and Module, and EMS, Electronic Manufacturing Services.
And it sounds like part of that might have been some seasonality pulled forward, maybe some inventory building too.
Could be, especially on the EMS side, maybe anticipating potential tariffs.
Yeah.
But they did mention the Taiwan earthquake caused some hiccups.
Ah, right. Component availability issues upstream.
Exactly. But within ATM, the advanced packaging side, LAP services, really showed strength. Jumped to 10% of ATM revenues.
Wow. Compared to 6% for all of last year, that's significant.
It is. And the test business grew too, surprisingly up 2%, despite the usual Q1 dip. Utilization was pretty good, slightly over the 65% target.
And advanced platform testing was fully booked?
Fully utilized, yeah. EMS also did better than planned. Maybe customers shifting orders around, leading to a shallower seasonal dip.
Okay, so overall consolidated revenues down 9% from Q4, but up 12% year over year.
Correct. And gross profit hit $24.9 billion, giving a 16.8% margin.
Which is actually up both sequentially and year over year. Nice boost there.
Yeah, driven by FX and more of that higher margin ATM product mix.
Okay. And operating profit.
$9.7 billion. Follows the same pattern down sequentially, but up year over year. Operating margin, same story.
Got it. Bottom line, EPS.
Fully diluted was $1.64, basic $1.75.
And the company acknowledged the macro volatility, right? Making long-term calls trickier.
They did. But stress focusing on core trends, package tech, process improvement, the fundamentals.
Makes sense. Okay, let's dig a bit deeper now, starting with that ATM business.
Right. So ATM revenues were $86.7 billion. Down just 2% sequentially, but up a strong 17% year over year.
And the gross margin for ATM?
22.6%. A bit lower than Q4, but again, improved compared to last year, partly thanks to that foreign exchange tailwind.
But operating expenses for ATM went up.
They did, yeah. Sequentially, it was mostly higher headcount. Year over year was more about R&D ramp up, labor costs.
Interesting. And within ATM, the computing segment really stood out.
Definitely. Big gains there, likely driven by, AI demand. Strong AI product pull.
While handsets and communications were seasonally down, which is expected.
Pretty much, yeah. Standard Q1 pattern for those.
Now that test business contribution, 18% of ATM revenue now, aiming for 19-20% by year end.
That's the plan. They see testing as strategically vital, especially as integration gets more complex. More test steps needed during assembly.
So they're really going after that test business.
Aggressively. They highlighted the margins are good. Similar returns to leading edge packaging, actually.
And backing that up with serious CapEx.
Significant CapEx going into test capabilities. They're expecting strong growth in AI testing market share, particularly later in 2025.
Okay, let's switch gears to EMS. Revenues there.
$62.3 billion. That was down 17% sequentially, a bigger drop, but still up 5% year over year.
But the EMS gross margin actually improved from Q4.
It did, yeah, up to 8.9%. They put that down to product mix in the quarter.
And operating profit for EMS
came in at $1.6 billion, down sequentially, but basically flat compared to last year.
And the revenue shifts within EMS were mostly just seasonal stuff, consumer comms products.
Largely, yes. Pretty typical seasonality playing out there.
All right, balance sheet time. How's the cash position?
Pretty healthy. $93.5 billion in cash, equivalents, and current financial assets.
But debt is up.
Total interest-bearing debt increased, to $231.6 billion. That's really in preparation for funding the upcoming CapEx.
Right. They expect net debt to equity to peak around 60%. When was that? Q3 25?
That's what they guided, yeah.
Right.
Shows the scale of the investment they're planning.
And Q1 CapEx was already substantial, $892 million on machinery and equipment alone.
Correct. Big chunks going to packaging and testing operations, plus another $410 million on facilities.
So these investments are really future-focused.
Wow.
Beyond just current demand.
Absolutely. It's about positioning for the next wave, AI, networking, comms, things like closer power delivery, HBM integration.
Higher I/O densities, all that complex stuff.
Exactly. Preparing for what's coming down the pipe.
Okay, let's look ahead. Q2 2025 outlook. What are they forecasting for ATM?
Pretty strong. They expect ATM revenue in NT dollars to grow 9 to 11% quarter over quarter.
And ATM margins?
Also improving significantly. Projected gross margin up 140 to 180 basis points. That's a jump of 1.4 to 1.8 percentage points.
That's quite healthy, but the EMS outlook is different.
Yeah, contrast there. They expect EMS revenue to decline 10% year over year.
Ouch. And EMS operating margin.
Also projected to decline by about 100 basis points or 1 percentage point year over year.
So despite the EMS dip, they still see strong overall product flow in Q2.
Led by advanced packaging and testing, yes. And they flagged that potential for continued early seasonality or inventory build.
Due to those tariff concerns again.
Right. Though they did add a caveat about capacity limitations potentially capping that upside.
And beyond Q2, no major changes to the outlook for now.
Not that they highlighted no. Seems relatively stable further out for the moment.
Okay, let's touch on some points from the Q&A session. That AI test market share push.
Their focus for the second half of the year is going to be on final test for those advanced chips. That complements their existing strength in wafer sort.
And you talk about U.S. investment.
They said they're looking at it based on customer interest and discussions, but the key driver has to be economics, not geopolitics.
And it would likely be an extension of what they do in Taiwan.
That seemed to be the implication, yeah.
Did they break down the AI test share targets, like GPU versus ASIC?
No, not that specific. They just see broad opportunities across the test business and are confident they can gain share.
What about worries over demand swings from, say, a big partner in advanced packaging?
They basically said they haven't seen anything unusual. Still playing catch-up, really, to meet that long-term AI-related demand.
Not just for the AI chips themselves, but related stuff, too.
Exactly. So investment plans remain unchanged there.
And timelines for even more advanced stuff, like 3D IC or 2nm packaging. When does that become big revenue?
Still fuzzy, seems like. They're investing heavily in R&D, working with partners, but no hard timeline for significant volume revenue yet.
How worried are they about potential new tariffs?
They think their direct exposure is minimal, especially for ATM. Don't see changing prices as the answer. Maybe competitors get hit harder, they suggest.
And EMS exposure?
Less than 10% direct to the U.S., and they feel they can manage that.
What about the overall demand picture? Any changes there?
Mostly gradual recovery is what they see, except maybe lower-end auto, which is correcting inventory. High-end auto looks better. But no major shift in their outlook over the last 3 months.
Did they give specific Q2 revenue guidance by EMS sector?
No, they cited customer confidentiality. Just reiterated, Q2 is usually the slowest for EMS seasonally, though maybe the dip is shallower this year because of some pull-ins.
And looking longer term, margins still expected to rise in the second half.
Yes, with more advanced packaging contribution. Full-year CapEx guidance also unchanged.
And they think they'll hit their target margin range sooner.
Starting in Q2, actually, aiming for the midpoint in the second half, assuming no major disruptions.
And that $1.6 billion target for leading-edge advanced packaging revenue for the year, still on?
Still on. Capacity is being prepped for various CoAS package types.
This push for internal testing revenue sounds serious.
They called it an all-out effort. Broad market share gains, but with a real focus and investment in AI and leading-edge test. Expecting progress in final test in the second half.
Last point, panel-level packaging. Where's that at?
Still in pilot lines. Customer qualification plan for late 25 and into 26. Adoption depends on customer needs and timing.
Okay, let's shift to our This Is Not Financial Advice segment. Time for a trade idea based on all this.
All right. So we heard a lot about the major push into testing, especially AI testing, and the huge CapEx behind it.
Right, a clear strategic priority, aggressive expansion plan.
So here's a thought. What about looking at companies that supply the consumables or highly specialized services needed for that advanced testing?
Interesting angle. Not the test equipment makers themselves, but...
Exactly. Think about, say, companies providing specialized cleaning solutions, or perhaps calibration services, or even unique probe card components specifically for these complex AI chips.
So as this company ramps up its test volume, the demand for these essential supporting elements goes up too.
That's the idea. It's a bit of an indirect play. Less about betting on the main company or the specific test equipment vendor, and more on the ecosystem supporting that massive testing expansion.
That's sort of picks and shovels for the AI test gold rush, but maybe one level deeper?
Kind of. It's definitely higher risk, probably smaller, less followed companies, but it leverages that big strategic investment we just heard about, predicated on that AI test ramp really happening in the second half and beyond.
Got it. An interesting speculative idea tied directly to the call's themes.
And maybe just quickly, an alternative could be tied to that potential inventory build mentioned for ATM.
ahead of tariffs.
Yeah. Could mean a short-term bump for suppliers of, say, advanced packaging substrates, a near-term trade on inventory stocking, layered on the long-term AI growth story. But you'd need to watch trade policy closely there.
Two distinct ideas stemming from the discussion. Okay, that brings us to the end of this deep dive.
We've covered the financials, the segment performance, the investments, the outlook. Hopefully giving you a solid handle on things.
We certainly hope this breakdown provided some valuable insights and saved you some time. What stood out most to you from this call?
Yeah, what questions does this raise for you going forward? It's always good to reflect critically.
Absolutely. Remember, cutting through the short-term noise to see the longer-term signals is often key. Keep exploring. Stay informed.
Thanks for joining us for this deep dive.